Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Jnby Design Limited interim report. Jnby Design Limited offers a diverse range of products and services across various segments. The company operates through three main segments: mature brand, younger brands, and emerging brands. Under these segments, Jnby provides fashion apparels, accessory products, and household goods. The company's product offerings include contemporary apparel, footwear, and accessories for women, men, and children under its various brands such as Jnby, CROQIS, Jnby by Jnby, Les POMMEDETERRE, Jnby HOME, Onmagame, and B1OCK. In addition to these products, the company also offers household goods. Jnby sells its products through both offline retail stores and online channels. The offline retail stores include self-operated stores as well as distributor-operated stores. This multi-channel approach allows the company to reach a wider customer base and increase sales. Jnby Design Limited's stock price has experienced a significant increase of 59.93% in the past year due to strong financial results and positive analyst sentiment. The company reported higher revenue, profit, and margins for the first half of fiscal year 2026, exceeding expectations and demonstrating steady progress towards its targets. The expansion of gross margin by 1.4 percentage points was attributed to effective discount control and a favorable brand and channel mix. This led CLSA to raise its target price for Jnby to HKD 25 and maintain an outperform rating in early March 2026. The company's commitment to shareholder returns is also evident through the increased interim dividend. In addition to financial performance, Jnby's sustainability initiatives have contributed to its stock price increase. The collaboration with BioFluff for plant-based faux fur in the Spring-Summer 2026 collection of Croquis aligns with growing consumer demand for sustainable fashion. This move demonstrates the company's adaptability and commitment to meeting changing market trends. Furthermore, Jnby's business expansion plans have also boosted its stock price. The announcement of a modern park project in China signals the company's intention to expand its operations and increase its presence in the market. Overall, Jnby Design Limited's strong financial results, sustainability initiatives, and business expansion plans have contributed to its significant stock price increase in the past year. Jnby Design Limited market capitalization of 11 billion is significantly larger than the average industry peer of roughly 1 billion. This shows that Jnby Design Limited holds a significant advantage in their industry. Jnby Design Limited trades at a higher price-to-earnings ratio of 11 times and a higher price-to-book ratio of 3.61 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 47% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 6.91%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the given summary. On one hand, several factors contribute to revenue growth. The increase in total revenue by 7% and net profit by 11.9% is a significant indicator of growth, page 1. The expansion of sales channels, both online and offline, has also contributed to revenue growth. For instance, the growth in sales of online channels and the expansion of scale of offline stores have been notable, pages 31-32. Furthermore, the deepening and consolidating omnichannel retail network has integrated offline and online channels, leading to increased membership accounts and revenue growth, page 34. The performance of individual brands also indicates growth. For example, mature brand Jnby saw a 5.7% increase, while younger brands less experienced a 16.3% increase in sales, page 35. On the other hand, there are factors that contribute to revenue decline. A decrease in same-store sales of offline retail shops by 2.2% due to fluctuating customer traffic and insufficient value-added services is a notable concern, page 33. Additionally, a decrease in capital expenditure by 19.4% has also impacted revenue growth, page 40. In conclusion, the primary drivers of revenue growth or decline are multifaceted and influenced by various factors. While expansion of sales channels, brand performance, and membership accounts contribute to growth, fluctuations in customer traffic, insufficient value-added services, and decreased capital expenditure hinder revenue growth. The net income of the company experienced a significant increase, rising by RMB 72 million, or 11.9%, from RMB 604 million to RMB 676 million. This growth in net income is a positive indicator of the company's financial health and performance. In terms of profit margins, there was an improvement across both gross and net profit margins. The gross profit margin increased by 1.4 percentage points, rising from 65.1% to 66.5%. Similarly, the net profit margin also saw an increase, rising by 0.9 percentage points from 19.1% to 20%. These improvements in profit margins suggest that the company is becoming more efficient and effective in its operations. The reasons behind these changes are not explicitly stated, but it can be inferred that the company's efforts to improve operational efficiency and reduce costs have paid off. Additionally, any strategic decisions made by management to optimize pricing or product offerings may also have contributed to the increase in profit margins. The company's financial performance is a testament to its ability to generate positive operating cash flow. One of the key indicators of this success is the net cash inflow from operating activities, which stood at RMB 996 million. This significant amount demonstrates that the company is able to generate substantial cash from its core operations. Furthermore, the operating cash flow is reported as positive, indicating a strong ability to convert earnings into cash. The data also shows a consistent trend of net cash generated from operating activities over the past 2 years, with RMB 996,043 in 2025 and RMB 822,603 in 2024. This stability suggests that the company's operations are generating sufficient cash to support its growth and development. Overall, these indicators confirm that the company is indeed generating positive operating cash flow. Management is emphasizing the company's investment strategy, which focuses on achieving growth through equity and income generation. Key investments include venture capital funds related to a non-executive director, Mr. Wei Ji, and a significant stake in Hangzhou Jiasheng Catering Management Co., Limited. Additionally, the group holds financial products with expected returns from reputable commercial banks in mainland China. Management's outlook suggests that the company is diversifying its investments to maximize returns while minimizing risk. The acquisition of Hangzhou Jiasheng Catering Management Co., Limited, highlights the company's focus on strategic partnerships and long-term growth opportunities. Overall, management's strategy appears to be centered around prudent investment decisions aimed at driving future growth and profitability. The company has a history of paying dividends to its shareholders. In 2025, it paid out a total of RMB 8,000 in dividends. Furthermore, the company also declared and paid a final dividend of RMB 440,941,000 for the year ended June 30, 2025. This indicates that the company has prioritized returning value to its shareholders through dividend payments. Concerns about inventory buildup and supply chain disruption are evident in the recent data. The increase in finished goods by plus 42,322 units suggests that companies may be struggling to manage their stock levels effectively. This is further supported by the rise in provision for inventories by RMB 52,422 from 2024 to 2025. Moreover, the decrease in the release of provision upon sales of inventories written down in prior years by RMB 95,217 from 2024 to 2025 indicates a potential disruption in supply chains. This could be due to various factors such as production delays, transportation issues, or changes in consumer demand. The combined effect of these trends raises concerns about the ability of companies to manage their inventory and supply chain effectively, potentially leading to further disruptions in the future. That concludes the financial summary for Jnby Design Limited. Feel free to comment below, and I will be happy to answer them when possible.